General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, this should be good to go. All right, so for Friday, I didn't do my markup. Friday was first, and all I had was just the results for the dollar. And for NASDAQ. So what did the dollar do? Okay, that's actually not bad. It's kind of beautiful. It could be like, I don't know, peace and blessings. It could be like, it's kind of signaling a retracement's over, but that's just one day, and I wouldn't fully negate it until we stay below this volume imbalance. I use that like a dynamic support. So this is good. It's like, okay, I'm ready to start selling, but it's not official till we get some type of confirmation. And he gave the sale. Now I wanna wait to see if bearish order flow is confirmed. we start selling retracements. $1 on the daily. It's a green light for these Forex. Uh, then that's that. What did it do on Friday? It sold all the way to old all-time high. So, so all the way to old all-time high. Note to self, look at Friday's delivery. No doable retracement setups. Just one-sided nil. Even NFP didn't smooth out price action. Go to week 2. A4 to 8.8. Sentiment. Hmm, Seems like bullish sentiment went up just a tad for the most part. Still about even with both sides having a significant lead. VIX. Oh yeah, this is noteworthy. It's the first time we've been on neutral on the fear and greed index in a few months. Fear and greed in a couple of months. So we just kept on leaving greed. As we slide back to fear, it's gonna be okay to start buying. I bet one of the things is people want to buy that dip, probably like right now. Go to the VIX, CFTC. Here's another VIX too for the bonds called Move. Chat. Hmm. Commercials. It look long. Non-commercials look position short and bullish on the market. Commercials almost to the long. Open interest. Let's go here. Larry Williams. X COT. Bearish overall. So they bullish on the market. Asset managers, a heavy short, leverage funds, net. Who's bullish on the VIX? Okay. Net positions, active only, still highly bearish, given the large net short position by institutional players, especially asset managers. Institutional players expect volatility to decrease, could signal complacency or a period of calm in equities, which makes sense because it's summertime or about to be over really. It's tend to bottom in July, August, and spike in September, October. Okay, July, August. Just started August. Let me put this in there. And I don't need that last little part. Boom. See, Forex Factory. What? Okay, we don't have any news today. All right, so this does kind of throw off the mojo. We got week one doing its supposed to do, but week two is missing CPI. So week three, when options expire, it's gonna be CPI. They don't have no more PPIs week four this week or this month. Okay, this month's gonna be weird. We got Jackson Hole at the end. Minutes. Oh yeah, this is gonna be definitely a weird month. Because September's kind of setting it up for that to be like the major Fed fund rate, probably. Okay, no major news this week. We have EMI on Tuesday and unemployment on Thursday. This sets us up for a Tuesday. Thinking really for thinking for a Thursday midweek reversal based on the sentiment, the news really, because it's not the world that the news has with jobs data narrative they are trying to run with is um we lost 800 million jobs. I think it was a big number. It was either a million or a billion. So people will be paying attention. to unemployment this week. Is it something I'm really looking at like that? No, because only jobs that really matter is the jobs and the companies or the stocks you own. And let's see here. CME Fed watch. I wonder if NFP did move that. Okay, so we had an 80% chance of a heck. This is what I wanted to see around this time, but it needs to hold until the end of this month. And so at first I was thinking by the middle of August, if this number is leaned kind of like it is now to like the 80s, then we could say, okay, we can position ourselves for a rate cut. But this ain't this too early right now. So we had 80% for a rate cut, but it's only week one or it's only week two. So by September 17th, we will have two rounds of CPI. It'll be a major factor. And determine if we should start positioning ourselves for rate cuts and look for small caps to start swinging. Mm, no, Palantir, last time I had earnings, moved the NASDAQ. They not top 10. So be where Monday market close. Let's see. Anything else? Okay, Tuesday AMD, that could move. Lucid. Lucid was my first win. Block. That's not the real block. Wendy's. Wendy's put like a Pop Tart in the frosting. Okay, let's see here. All right, so not too much this week. No top 10, but two notables. Palantir Monday and AMD Tuesday. Most likely
Peace, peace. What is that pilot
won't
said, man?
move the needle, but still be aware. It's crazy Sony don't move the NASDAQ. Dollar on a daily. I remember mapping this out last week thinking it could still go up there because we was doing all this, but it really only just wanted that, and it respected 50% of that. So I do like this reaction on this level. I think I just had a new circle. See, see if this is. On the reaction and consequent encroachment of volume imbalance. We retrace and react off the bearish order block. And I can start looking for swings. Until then, just scalp. Nas and wait on position trades. NASDAQ. Let's go here. CTC. Last week they did about $1.02 for that retracement. So they kind of signal that. Non-commercial still got all the open interest over 55%. They still short dollar. Dollar still short. Still supported by the COT, which gives us institutional power behind our swings. Put this in the chat. This is Big C CLT report. Yeah. I could see it retracing too, because it'd be like everybody's gonna come in like, yeah, this dollar's finna sell off. Then people start like buying gold, taking this to bottom, and that thing just start dropping even more. And net positions, net long, net short, boom, boom, boom. Yeah, that should be it. Bullish commercials. Yeah, bearish non-commercials. This is gonna say, because I've been looking at this for a couple weeks, it's gonna say it's so one-sided, which is weird to see non-commercials in control of something. But they're like, okay, this is like reversal the way positions are set up. The dollar tends to strengthen in August to early September, particularly if coming off summer lows. Strengthen in August to early September. This is saying possibly trace. Oh my. So if I'm bullish on assets and it's gonna drop like every week, then I'm supposed to buy every week it drop. Should look at the COT for Bitcoin. Here we go. That's that. Okay, that's my co-pilot. And commercials are short, non-commercials. They took a lot off the table. They spend the time with the kids for the summer. They're long, not commercials. The commercials got all the short and they got 67% of the short interest. Non-commercials got cooked. Let's go to here. This is NASDAQ COT. Mm. Large specs and retail are both bullish while commercials are heavily hedging. This is not really surprising. It's typical start of month. NASDAQ often tops in August with increased volatility into September, October. That's notable. It's another good thing. The chat just be reminding you of the seasonality. You'd be like, yeah, I needed that. Boom. So this dropped. No, this dropped. Hold on. I think that's AI. Okay, there we go. Yeah, this dropped. Lined up with the seasonality. But I still think this is typical season and could get more abnormal delivery in Q4. That was fast. Look how fast we came back. So we back to June. Now it's monthly TP. It's a new month. I need a new monthly TP. Oh, it just gave me one. Here, here, and here. These fib extensions been hitting too. 2, 4, 483.50. And this will be August TP. Put the coordinates on it too, just in case this line move. We balanced. We balanced this push up to new all-time highs. Note the delivery. We did not create a large range. This was a baby push-up. Monthly internal range liquidity. We have a huge monthly fair value gap. But I'm thinking showing low would be ideal for the accumulating loans. Retirement funds. You could just retrace fair value gap and then keep it going nice and simple, but we would have had to do a bigger push up for me to be like, okay, we're just gonna keep going. Like this impulse move up was not even half of this move. And this don't even count to me. Let me put this on. This interval on me. Yeah. Up to the week. Okay, that's that previous week's open price. Completely smacked it. This is now an order block the way we engulfed this candle. From below. Okay, yeah. This week didn't take out that week. That's bogus. That makes this like super low hanging fruit. Only thing I don't like about the delivery last week is that candle so big we can chop in that candle all week and not do anything. We don't have that much news. BMI is big, but it ain't that big. It seemed like we kind of did everything we needed to do with the earnings and the Fed fund rate. Like we finna chill out maybe for like 2 weeks. It might be some take 50 points. And weekly target 22, 780.25. No, last week was large range. After a large range week, expect chop. I'm starting to actually like chop more, which sound crazy, but the market chops so much. If you know it's gonna be like, all right, it's gonna let me snatch my 50 and move around, then it's kind of like an easier day than if you're expecting a real big move and then you sitting there expecting it. It's a lot more work because people been watching and waiting for this drop. Look how it just made you wait for it. But if you just know, okay, we chopping, let me just take 50. Then instead of waiting to put 2% on this drop, you could have just been making 10% on the way up here to put this 2% on to make this 10%. Take this off. Boom. I'm gonna keep this range because this is actually the first time we swept both sides of this range. Let me take the text off of this. Then let me take the text off of this. Well, now I can keep that. This is that daily order block, or this is the weekly. Yeah. It's an old daily high. What is this? A volume imbalance? Yeah. Okay. Shallow retracements. We got an old weekly low back here. Let's see. What's that at on a weekly? Oh, this is even further. Oh, this is this one. It look a lot closer on a daily. It look far on a weekly. This actually look doable right now. This day so big though, I'm gonna just let it chop because it could be hang around inside this candle, sweep both sides of this day. That could be our whole week. Maybe tap this. I don't think AMD. Maybe Palantir could push us. I don't know if all eyes are still on Palantir. Last time it pushed us. They keep on adding like trillions and trillions and trillions of dollars of market cap. So they got what everybody need, except for China. China already got that. No, it's a very large range thing. People want to come in the market, greedy for sales. Mm, lower prices make sense. I wouldn't start buying unless we used Friday's high and support. Matter of fact, let me put Friday in the range. Let's see. Put the eyes on Friday high just because I know it's a regular trading hour gap right there. Just how it opened. I had that alert set on that FEG. That FEG is gone now. I'm gonna still keep the alert. It's interesting inside this weekly order block. We got us a fresh fair value gap. We also got, I think Friday's high. Friday's high is too interesting just because it's a daily level and it's right next to a 4 hour gap. This is a beautiful long range. If we start off the day, maybe gap low, just clear out some of this old weekly levels, then I can take one trade from Friday's low to Friday's high and be okay. I think a lot of people is going to be scared though. That jobs number, that's all people talking about. It'd be like fake outrage though. They don't be telling you what kind of jobs. Like what jobs we lose. Some of the tracements here makes sense. I would want to buy if we start off the week clearing up sell side liquidity. Friday's high is a good buy target since we opened the day, delivered one side completely. And say, let me get the exact thing. Switch it to regular trading hours. Yeah, that regular trading hour gap is huge. Um, I need to annotate this. Let me take off this flat bottom too. This is where the gap starts. Um, let's use this color. Same color as everything else. The pink. So that huge gap here is at what price level? 23,088.25. So when you take it off of regular trading hours, just got a big candle. Boom. All right, so boom, yeah, we got the regular trading hour gap there. Put an alert on that. Yeah, Friday's interesting. Sales below, trades back to the regular trading hour gap. That's cool to start the week off. We might have a new week opening gap too, but just playing these gaps, not really looking to sell just to the dirt. We really don't have um, sell to the dirt sentiment. It ain't nothing bad going on. 2025 open price is not too far. Where we at right now, I actually start looking for puts because you know there ain't no reason for sales. I can hold the put for a year, and I'm pretty sure something's gonna happen. I don't know what. I don't even care what, because at some point it don't matter. You got to buy in and sell button. Just as long as it's happening, I can be able to eat off of it. We start this week with the gap down. Just wait and play the buy for regular trading out gap. Not looking for nothing too big this week because of news. But do run, leave a few runners just in case. 'Cause you don't want to be like it ain't finna be moving, and then you ain't got nothing in. You just missed out on all the money. It was perfect timing. I finished my cup of coffee. Boom, boom, boom. All right, peace.